This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Okay, so let's go through and look at the first part of the syllabus, which is all about the regulatory environment and corporate governance. But I think there's a little bit more to it than that. So let's go through and look at chapter 1, which talks about the regulatory environment. This goes through there and essentially looks at what the regulatory environment is, why is it needed, and then what constitutes, if you like, the regulatory environment. Okay, so you're thinking about regulatory environment is what sets the rules for us in the world of accountancy. Okay, once we've gone through and looked at that on this page, you know, we need to understand then how do we ensure that this regulatory environment is followed by accountants. Well, that's where we start to introduce the code of ethics, which is obviously very prominent across all areas of each part of the syllabus. And then after that, we need to think about who actually does the regulation. Okay, so who ensures, not necessarily who ensures the ethics are followed. Okay, but who goes through there and develops the accounting standards, who's responsible for updating the accounting standards, and how does all that work. So we've got 3 videos, if you like, from this first chapter. The first one looks at the regulatory environment itself. Second one goes through there and looks at, is it the ethics aspect? And then the third one goes through there, doesn't it, and begins to look at the regulatory bodies. Okay. So we're looking at the regulatory environment for financial reporting. So we need to regulate that information. Why is that the case? Well, what we've got there is we need to ensure that for a business that the financial performance in the statement of profit or loss, and if you like the statement of financial position, that needs essentially to be understood, doesn't it, by the users. Okay, remember that the directors are acting as the agents, aren't they, for the shareholders. Yeah, the directors are responsible for preparing the financial statements for the shareholders to use, obviously as well for other user groups such as the government, suppliers, customers, competitors, etc. But the primary use is for the shareholders, isn't it? And the shareholders need to be able to look at the stewardship, don't they, of the business, and to see that the business is being run well. Okay, so what they want to see in the financial statements is what actually has happened. Okay, the performance has either improved or got worse, and they can see why. That the position has actually gone through there and improved, and why is that the case? What assets is it that has led to an improvement in the overall position and potentially the performance? Okay, so the shareholders want to ensure that information for them is actually useful, and what we can do there is that we can ensure that it is through regulation of the accounting standards. So if there are rules, that they are there to be followed, that those rules are followed, and that they are being followed, if you like, to the letter of the law. Okay, and therefore that will then go through there and ensure that the shareholders get the information that is needed. Okay, so without the regulatory environment that is around the preparation of the financial statements, then the shareholders cannot get the assurances that they need from reading those financial statements. But with the regulatory environment around, then it makes it a little bit fairer for the users of the accounts to make judgments, and to see why things have changed. Okay, if we go through and look at what constitutes the regulatory environment, so just a little bit further down below, that there are 3 essential elements that you have. Now, I think some of the literature, the textbooks split it down, but I personally think that there's 3. Okay, what you've got there is that financial statements, when they're prepared, need to abide by local corporate law. So whatever government jurisdiction that there is, they will lay down the laws as to how the financial statements should appear, and rules, if you like, about distributable profits. So when dividends can and can't be paid. So what you have there, again, admittedly, not all of you are based within the UK. Maybe you could look for an equivalent in your local jurisdiction. But in the UK, what we have there is we have what is known as the Companies Act. It was established by the UK government, It gets updated fairly regularly, and that will go through there and lay down the law, which accounting regulations you must follow. Okay, so it doesn't list out the accounting rules, okay, but it tells you what rules you must follow. Okay, so who provides those rules? Well, that's what we'll see in a moment. Okay, what you've also got as well, regulatory environment stems from the frameworks. Okay, so the framework, whether that's a local framework or an international framework, essentially that's like the building blocks. Okay, I like the words that we've put there. They are principles or ideas uh, that you then have to follow to develop the accounting standards. So the example that I've always used is, it's a little bit like the Rosetta Stone. You may not be aware of the Rosetta Stone. Has anybody been to London? Yeah. Did you go to the British Museum? No, there's probably better things to do than the British Museum. That's my personal opinion. But if you get time, there's lots of relics and antiques and stuff like that that have been taken from around the world and put in the British Museum. One of them is the Rosetta Stone, and it's the most popular tourist attraction there within the British Museum. Essentially, there's lots of carvings on it and inscriptions, and it was those inscriptions that then led people who were involved in history and archaeology to understand Egyptian hieroglyphics. Okay, so that Rosetta Stone was if you like, the framework for them to understand how hieroglyphics came about, and hieroglyphics, difficult to say, isn't it? Hieroglyphics essentially is like the development of language, isn't it? That was one of the first ways in which humans knew about communicating written language and written speak, wasn't it? So therefore, what we can then think about is that your framework is the Rosetta Stone, isn't it? That underpins the development of all the accounting standards and helps us understand why we have those accounting standards based upon the principles that are set out. Okay. Because then what happens is that those frameworks then help us to prepare financial reporting standards. So in those financial reporting standards, they are essentially the rules, aren't they? Whether they are local rules or whether they are international rules. Now, international rules is what we follow in our syllabus with all of your IFRSs and IRSs. Okay, sorry, IASs. And what you'll find there is that IFRSs, and we'll touch upon it again later on, is that they are very principles based. So, they take some principles. Those principles come from the framework, don't they? Okay, and they've used those principles. They allow, if you like, a little bit of subjectivity, okay, estimates and how you go through there and interpret things. They allow for the fact that different people could interpret things slightly differently, but as long as the principle is followed, then that is fine. Okay, and that set of principles is applied to all areas within the financial statements. You could have, if you like, is it there your local rules? So we could have the, is it UK GAAP? So your UK generally accepted accounting practice, or is it there your US GAAP? And the key thing that you will determine about your US GAAP is that we will see is very much rules based. It's not about principles taken from a framework. It's all about a set of rules and doesn't allow, if you like, any subjectivity. Because if you think about it, that's how the American culture tends to work, doesn't it? Okay, it's very rules based. If you break the rules, then there is evidence that you've broken the rules, and then you could be sued. Okay, that's just America operates with a very litigious culture, doesn't it? Whereby people can sue and counter sue. Okay, so the key bit there is that your IFRSs are based on principle, so use a framework. And we apply the framework to all the accounting standards, whereby US rules are very rules based, and you just apply the particular rule to a particular standard. Okay, there is, if you like, a process that we have there, is it of convergence. Over the last few years, we have tried to establish convergence, so to develop the IFRSs, but making sure that we incorporate a little bit of the US standards. So it's very difficult to balance up, isn't it? The US rule makers want rules. We internationally want principles. But if we don't get the Americans on board, then that the IFRSs aren't then truly international. So there's been a lot of give and take, a lot of debate. So what we tend to have is it's sort of like a bit of a hybrid, particularly when you look at new accounting standards and IFRS 15 and 16, is that they are still principles based, but there's a little bit more detail to help you with subjective matters. So to help you, if you like, move in a little bit of a rules aspect to it. Okay, so it's sort of between a middle ground, but closer to principles as opposed to rules based. Okay, just be aware other local rules may not be principles based, may not be or may not be rules based. But accounting standards could also be used based upon tax rules. Okay, I think German accounting standards are very focused upon the way that the tax authorities treat things. So there's very little difference between accounting profit and taxable profits, but just having awareness of that as opposed to developing any further understanding. We tend to have rules-based, principle-based standards, and then, if you like, tax-based standards. Okay. There we go. So that's the regulatory environment. That's what underpins things. So the local law, if you like, then dictates whether you use local or international financial reporting standards. And those financial reporting standards are either underpinned by a framework and are hence principles based, or are not underpinned by a framework, in which case they are rules based. So the IFRSs have your framework to go through that we will see in later chapters. So it's very principles based, whereby the US tends not to have that and is more rules based. Okay, it's quite interesting to read up on if you get additional time. But other than that, that's all that you need to know for the time being. What we'll look at in the next session is if we have these financial reporting standards that are applied by ourselves, accountants, how do we ensure that they are applied correctly? Okay, well, we apply them correctly, and if you don't, that brings around ethical issues, doesn't it? So I'll see you all in the next session to talk about ethics.